Good afternoon, good evening, good morning. Depends on which part of the world you're watching this webinar from. Uh, my name is Rashmi Shah. I'm doing this webinar from Dallas. I'm on behalf of Simplicity Investing India Private Limited. And a caveat, a disclaimer, this webinar is for Indian residents, people living in India, and we are not promoting any investments. We are just today in this webinar, we are just talking about what's next, how the financial market and stock markets are going to react after the US elections. I'll talk for about 20 minutes, 25 minutes, and then you can, during that time, you can text the questions on the YouTube chat. And I would also like you to subscribe to our channel if you like this, because this kind of webinars we do twice a month. And so now let's begin, correct? Yeah, November 3rd, everyone was waiting for the US elections. So market was expecting Joe Biden to win, Democrats to win, but with much larger majority, correct? Finally, he won. He's on the verge of winning. Still, he's officially not been declared as a winner. But there was so much anxiety before the elections worldwide, and this was the best elections for all the TV channels, because they get, and YouTube, Facebook, Twitter, because they get a lot of advertising. Almost, I think about $8 to $9 billion was spent on advertising for last 2 weeks by both the candidates. So, and there was so much hype that this will happen, that will happen, and markets will crash, all kinds of conspiracy theory, and still they're there, correct? And the election, it was one of the biggest elections in the history of US. More than about 150 million people voted. And it was a very interesting election. And now, so what's next, correct? So what's next? What's going to happen next? Everyone was expecting that there will be a blue wave. Blue wave means Democrats will win the presidential, the Congress, and the Senate. There are three wings of the government here in America. Like in India, we have the Prime Minister, the Lok Sabha, and the Rajya Sabha, correct? So the Senate here is the Rajya Sabha, Lok Sabha is the Congress, and the Prime Minister. Now, here in India, the Prime Minister is elected by the Lok Sabha. Here, the President is elected directly by the people. Now, the law here is every state elects the presidents, and every state has a certain weight, and they are called electoral colleges, correct? They give a number based on the population, and whoever gets 270 number, he becomes the US president. So there is a direct, so every state elects its winner, takes all the weightage from that state, and based on whoever gets to more than 270 becomes the president. It's a little bit different. In India, the Prime Minister is elected by the party. Here, the president is directly elected by the people, correct? The parties nominate the candidate, two candidates, and those two candidates are also elected within the party by votes. They can't say, no one can, there is no high command here, like in India we have, correct? There is no high command. It's a democratic. Now, what happened in US this week, everyone was expecting the markets to come down, and to our surprise, to everyone's surprise, Dow Jones went up by 7%, Nasdaq went by 8%, S&P 500 gave 7.5% return, Nifty has given 5.3% return, Japan Nikkei has given 0.6% return, Hang Seng 6.7%, and South Korean KOSPI has given 6.6%. So all global stock markets of the world rallied, correct? And Nasdaq, Nikkei, Nifty, they are all towards their 52-week high. So many investors who were waiting on the sidelines to invest, they couldn't participate in this, and there was a quick rally. Now, the media creates a lot of fear, correct? When fear happens, most of the retail investors clamp because what happens is we have a short-term memory, and the short-term news affects our minds and our decision making very heavily. And there was so much hype against the U.S. elections that this bad things are going to happen that people didn't invest and they missed the rally. Now, if you see 2020 as a year also, I'll share in the next slide. These are the global markets year-to-date returns. Dow Jones, this year there were US elections, there was a COVID lockdown, there was a recession, worse recession, and the Dow Jones has gone up by 12%. Nasdaq has given 38% return from January 1st till today. S&P 500 has given 12%. Nifty has given only 1% return. India is lagging. Japan Nikkei has given 12% return. Hang Seng -9, and South Korean Kopsi has given 10% return. So you see the kind of returns. So India is still lagging the global market, but Nasdaq and Dow Jones and S&P 500 has given a fantastic return. Nikkei, correct? So what is the future now? What's going to happen? What investors should do, correct? So now we are going to go back to normal after 10 days. The new government will come into place, and then what will be happening? So I want to focus back to COVID. There is again the COVID. So in last 1 week, I think day before yesterday, America had 120,000 COVID cases, positive COVID cases in one day, record 120,000. Nowhere in the news. No impact on the market. Market is going up. Now, the second wave of COVID is very bad, which is very bad in Europe, very bad in America. They expect the second wave of COVID to be there in India in December and January. So we'll be going back to the COVID world, the media and the TV channels and all internet and all that, correct? The news after the US election settled down. So we'll go back to science to solve the problem of a COVID to get them. And the world, I expect the world to get normal only after 2 years. Like the 2019 life, what we had, that kind of life normalcy will only come in 2023, and that's a long period. So what happens in those 3 years? Habits and behaviors changes. So we'll see a lot of pain in the markets everywhere. A large number of small and medium companies, worldwide businesses are going bankrupt. They're still in US also. There's a lot of pain. Cloud computing and digitalization is going to give even furthermore. Many people, it's very difficult to change. It's very, very difficult people to change, correct? And that, you see, the US elections also, they were not electronic like we have in India. There are still paper ballots here. So even a modern country like America finds it so difficult to change, correct? And even after 7 days, it's not 7 days, today is the fourth day, even after 4-5 days, the votes are still getting counted. So very difficult to change. But those who change, they will benefit. So IT and cash-rich companies would win. They would win, and social distancing will be a norm of our life. So this slide, which I showed in the month of April, that trend is going to come back, correct? That trend is going to come back. Now, I would like to share something else with you that, when we started Simplicity in 2013, we had designed a core philosophy of where we are going to invest. So we said our investment philosophy is going to be based on technology and innovation. So we are going to invest in technology sector and innovation. We are going to focus on that. We are going to focus on demographics, the world's population, aging population, and all that. And we are going to focus on global investments for all our Indian clients. And we are going to focus less on government. But unfortunately, what happens is people in India, America, everywhere, we focus too much on government, like elections, this law is changing, this is happening, that is happening. They don't have any impact. They have only 20% impact. The biggest impact on your investments is how do you understand technology? How do you adapt technology and innovation, and what kind of portfolio you have? A portfolio should have full of businesses and companies which has technology and innovation. But then demographics, how do you understand? So since 2013, many of you who are watching this webinar know that we have been investing in US technology stocks since 2013. We have been investing in IT technology funds, and we are investing in healthcare mutual funds. We have one of the largest corpus of healthcare mutual fund and technology funds and US equity funds in Pune. We have one of the largest. So we didn't know COVID was going to happen. We didn't know in 2013 when we designed this portfolio, Congress government was there, UPA one was there. We didn't know Modi is going to get elected. We didn't know COVID was going to happen, demonetization is going to happen, there is going to be a burst in the real estate sector. Then Donald Trump is going to win 2016 and 2020 is going to lose. We didn't know. But we designed the portfolio in such a way that, no matter what happens, that portfolio is able to withstand all this kind of stuff. And that is the key. So the future, the same trend, same thing we have to focus on. We don't, but unfortunately, we all get carried away by too much headline news and too much the fear of greed, correct? And we focus, and that's human tendency. I've seen that everywhere in India, America, everywhere. So we need to, and we focus too much on media. The more you focus on media, the more wrong decisions you will take. Because media focuses only on sensational and short-term news. Now the headlines news will be there. Oh, so many people made billions of dollars in the market today. And last Monday they said markets are going to crash, billions are going to lose money. Now, it doesn't help if you track. What we need to do is we need to focus on what is going to happen in the world. World is not going to end, and focus on that. So I'll show you this is a slide which is there in all my presentations, and this is the core philosophy of simplicity. This is the core philosophy, and fortunately we did very well during this bad period. 2020 is one of our best years in the last 4 years. We have been doing very good. Now, this is my original slide from 2013 presentation. I've been saying focus on technology, focus on demographics. So why we invested in the healthcare sector? That time we didn't know COVID was going to happen. We selected because we said in next 10 years or 15 years, India's population of senior citizen, people above the age of 50 and 55, is going to increase by 600%. So when that population increases by 600%, senior citizens have higher purchasing power, they have more savings than the younger people, and they focus more on health, so they are going to buy more medications. So our Indian pharmaceutical industries will do very well. So we focus that way. Now, then understand global trends. Why you need to understand global trends? So I'll give you a classic example again of healthcare sector, correct? Now, Indian pharmaceutical industry or Indian pharma funds have given more than 60% return in last 1 year. But do you know how much the US pharma companies have given? The US pharma company has given in minus 2% return in last 1 year. But in US, the US healthcare, biotech and genomics, or the innovation, the hospitalization and the other services of healthcare, they have given 100% return this year. So you need to understand the trends. You need to understand globally what are the global trends, and we need to pick up the portfolio that way. And we should not focus on, what happens if Modi loses? What happens if Trump loses? What happens? There is going to be no government. Okay, see, last 8 days, there is no government in US. If you see, nobody knew who's going to be the prime minister, the president of US, correct? But the world is functioning in an orderly manner. Nothing, and markets are going up, correct? But there were so many news and videos circulating before this event that, if the election is closed, it will go to Supreme Court and there will be total riots and all kinds of stuff. Nothing has happened, correct? So we need to be very calm, rational, logical on our investments and not emotional, get carried away by the media or the data, correct? So it doesn't help. And media will give you minus 20%. It will take away 20% of your returns, which I've been seeing in all our clients. Many clients do get swayed by this. We try to counsel them. So their returns are 20% less than the other average returns because they don't follow the process. So following the process, if you watch too much media, it's going to impact your returns. I guarantee you that. The world is going to function, the world is going to grow in spite of bad news of COVID and all this. markets are at 52-week high, now what? So people don't want to invest, correct? So no, if markets have breached 52-week high, that means we are coming out of recession and markets are going to rally now. I expect markets to rally for next 3 months. If any correction will come, it will come in the month of February or March. So this is the way. So why these things are happening? What was the market expecting? Correct. So what was the fear in the market in the U.S. and the global market? Market liked Trump because Trump said if there will be lower taxes. He's not going to increase the corporate tax rate. Everyone loves bashing China these days. So many Indians I used to talk to, if Trump loses, what happens? Joe Biden will favor China and not India. Now, Trump is a businessman. He was China bashing superficial, but underneath, a lot of deals were going on. China, the US and China imports, business, the biggest trade deficit was last month. And regular tech companies, because he was upset with tech companies because he has a personal rivalry with Jeff Bezos of Amazon. He wanted to destroy him, correct? So there is a personal ego clashes were going on between that. And so all that agenda was happening here. On Joe Biden's side, he said he's going to increase the taxes because he wants to take care of the middle and the lower income people in America and give them more health care benefits and policy changes to now Joe Biden is going to be policy driven, not event driven or emotional, correct, and focus more on sustainable energy. So what I mean by sustainable energy means he's going to focus more on electric cars, he's going to focus more on less on fuel, correct, oil industry, and work with tech companies. Democrats are more technology savvy. Now I'll give you another example, classic. But still markets, so he won and still markets went up. So good businesses don't mind pay taxes. So I'll give you a classic example. California state in America, and you compare the state of Texas. So in America there are three kinds of taxes: federal tax, income tax, state income tax, and local income tax. So in California, if you have a corporate office, Microsoft, Google, Apple, they have all headquarters in California. They pay the highest corporate tax rate of the federal, which is the central government. Then there is a local, which is almost California tax, which is 10%, and again the city tax, like San Francisco, wherever they are. So they pay almost 15 to 20% more income tax. In Texas, there is no tax. Texas is like Dubai. But all these big tech companies, they are in California. Why? If they have no tax, they can move their corporate headquarters to Dallas, but still they're not moving it. Why? Because the ecosystem, because of the talent, because of the business environment. So people don't mind paying taxes, or people don't, and that's a misconception. If there's a tax, stock market will come down. Now, stock market will come down if there is no good environment to grow the business. What stock market requires is the environment to grow business. Now, if you see, why did India underperform 2020 to Nasdaq by, there was no elections in India, but India has underperformed verily because the environment to create business in India is very poor compared to environment to set up new business in America. So that's why Indian markets are underperforming. In Indian economy, we don't have a single semiconductor, all laptops, all technology hardware. Everything imports, correct? We still have cement, steel, and we are talking about 19th century concept. Nobody's talking about 21st century concept there. Nobody's creating companies like Google, Apple, Facebook. Nobody's creating that, correct? So attractiveness of global investors to invest in India. Why would I come to India to buy a cement stock? Why? From America. So it's like going from Bombay to Baramati to buy a suit. Why would you go there, correct? You would buy a suit in Bombay. So same way, when you're investing, so the attractiveness of Indian market will go very well if the business environment is open. So that is very key, correct? So same thing happens. So that's why US stock markets are doing very good in spite of high taxes. So you need to understand that, correct? So the other thing, So why is understanding of why US market is so important for the global market? Why we at Simplicity insist everyone that we should invest at least 20% in the US market? Why we do that? Because US market accounts for more than 25% of the global GDP. 25% of the world GDP comes only from one economy, and that economy is the population is 1/5 of India's population. So 1/5 of India's population, and they have 10 to 12 times more GDP than India. So imagine the ratio. 80% of global trade is done in dollars. 80% of international trade, the currency is dollars. That is a domination. So that's why then 40% of foreign currency reserves of the world are in dollars. 40%. 35% of financial wealth and 40% of this there. 35% of the global stock market capitalization is in US. US is one of the best companies in the world. So you use every investor should see, not investor, I'm saying every human being in India or any part of the world today uses Microsoft, Google, Apple, Gmail. This COVID situation, we wouldn't have functioned if these companies were not there. The world wouldn't have been functioning, correct? Imagine during the lockdown, we could still make bank payments, we can still receive money, we could shop online, everything because of Google, Microsoft, Apple, those kind of companies. And 1/5 of the global FDI stock is in US. The maximum innovation today is happening. The maximum innovation is happening in 3 countries, US, China, and Japan. So these are the 3 countries, correct? And US is the largest of all them. So you need to, that's why US market is very important. And that's why US market influences the global market. Every high net worth investor, so anyone who becomes super rich in any part of the world, first thing he does, he has a US portfolio. And that's, so now, what's the future, correct? So what's the future? So if you look at now, the COVID is going to come back to limelight after this hype around the election gets over. You'll see healthcare, technology, financial market, consumer durables, and innovative companies. They're all coming back. The valuation of all these stocks, and they'll start rallying because these companies are going to benefit because of COVID. Because they are debt-free, they are going to earn more profits than 2019 or 2000 and even 2021. Their business, they made a big advantage, correct? So I'll give you a simple example. Simplicity is a technology savvy investing I would say mutual fund distributor, correct? We are completely technology driven compared to other people in Pune who are still paper and pen and personal. They suffered because of the COVID, whereas our business grew up by 70 to 80, 100% in this time. So every company whose businesses are technology savvy and who are lean, they'll grow, they'll benefit, correct? Financial markets, the importance of stocks, important. Now people realize that during crisis, cash is more important than real estate. So real estate is good for staying. You need a very nice house. That's fine. But beyond investment as a real estate is a bad time during a crisis. So during crisis, gold and financial assets are very important. So that's why they are rallying, correct? Consumer durables, but we need to eat, correct? So when you're eating from home and you're eating less from restaurants, you buy better products. So more cooking is happening everywhere in the world, including America. And Americans were not used to stocking groceries at their home. Now they started doing that. So what happened? The inventories went down with all FMCG companies and more demand came, correct? So that's what's happening. And innovation is taking place on supply chain and all other fields. Like there is a company called which provides doctor services on the internet, correct? Now, they say 45% of people in America are now open to availing doctor services on the internet without going to a physical clinic, which was only 9% last year. So all that kind of innovation is happening. Who would have imagined 15 years back that we can order medicine on internet and the medication is delivered to you at home? Even 10 years back when I was on FC Road near my office and I saw that all Uber Eats and those kind of companies delivering food, I was thinking, why the hell somebody would order restaurant food and somebody come and deliver it to your home? But today that's become a norm, correct? So all this kind of innovation is happening and technology is happening, and those companies are getting higher valuation, and people are investing in those companies instead of brick and mortar companies, and that trend will continue. So what are the new emerging trends in the market after this win? There will be more focus on sustainable energy. So Tesla is Tesla, you take the automobile company in America, which is electric driven, battery operated car companies, correct? The battery, it's the car runs on a battery. Now that stock, the market cap of Tesla is equal to market cap of all automobile companies in the world. That is the valuation it's getting, correct? So it's, but their market share is less than 5% in the market, but they earn. So just like Apple supplies only 20% of phones in the world, but it captures 90% of the profits of all smartphone companies in the world. So same thing is happening with Tesla, correct? Now, other thing, emerging markets will do well for next 2 years because interest rates are going to remain low in US, and the government of US is going to print more money. As they print more money, money is going to flow across the globe. So India is going to attract a lot of investments. Indians markets are going to do well. So at least for next 2 years, the Indian market should do well. Even if in the month of January and December, when we are going to have a second wave of COVID, let me tell you right now that there is going to be a second wave of COVID in December and January, and cases rise again, and there is going to be more panic. But markets that time will still do well. Because that everyone knows that's going to happen, correct? And all FFIs know that, and they have planned that investment record. So don't exit the market that time, because I already saw rumors floating. In December, India is going to face such a big COVID and stock market is going to crash by 50%. All kind of rumors float on WhatsApp. So I see that, and that's people who don't have time, they listen to all those kind of, we see the trend, we see the logic and invest that. Tech companies are going to do further. Most of the technology companies like Infosys, TCS at 52-week high, they'll continue outperforming. Everyone in India should have. Partially India has changed in last 20 years because of technology companies. India will change only with innovation and technology. India is not going to change by cement companies or steel companies or textile companies, but most, it's a very old-fashioned 18th century or 19th century concept. 21st century is all this these are the new growth engines of the world economy. We need to invest in that. US will continue to lead the global stock market recovery, and there's going to be more job creations worldwide. So this is the trend which I see for next 3 years. I'm very positive that things are there. Now, current fee factors. Now this is my last slide, and then I take questions. So the current key factors influencing the market are, market is discounting all bad news, no matter what happens, correct? So if you see 2019, after the March steep fall, markets are one way going up. So and there's so much bad news, correct? So much bad, Brexit, so many people dying in Europe, in US-China war, trade war, US elections, in India, so many people locked down, the serious lockdown, still the markets are going up, right? So markets are discounting all that. So people change only when they are put to extreme risk. So COVID has created an opportunity for everyone to change. Business models are changing, which is good thing. Now still all countries are not opened up. Today a foreigner can't come to India. Many countries have close their borders because of COVID. Gradually, as that opens, international trade is further going to go up, and you will see airline stocks, correct, and this all those hotel industries which has taken a very severe beating also recover. But the earnings from large and focused companies are going to be very good, and emerging markets will attract large FDI, as I said, correct. So we need to go with the positive. Now, let me caution you once here. Investing is an art. Investing, like cooking, is an art. Investing is art. It has to be done with a process and a passion. You don't try to time the market. And the unfortunate situation is, everyone tries to time the market. And the more you trying to time the market, the lesser the return you will get, and more the set up a process and build your portfolios. You should be fine. World is not going to end. And with this, positive note, I see very good now with US elections getting over, we'll be back to normal. What a hype it was, correct, for last 1 month. I live in Dallas. I see here. What a hype! What a hype! Yeah. So thank you, and feel free to ask questions. Let me see what questions we have. Okay, so the first question I got is, what challenges you face when markets are volatile or during the period of major event? So, yeah, this is a very good question. Thank you. Markets are you see, ocean is going to be volatile, correct? Stock markets, financial markets are going to be volatile. So when we work on a building or designing a portfolio, we factor this into it. Now, there are three parts, correct? The markets are going to be volatile, and the client's behavior is also going to be volatile, correct? We have to factor that. So we focus more on the client's behavior and design the portfolio. We design the portfolio that way. And we have designed the portfolios in such a way that we don't take risky bets. We avoid small caps. We avoid what is the flavor going in the market. So I always check what everyone is investing. I don't invest there. I go away from the crowd, correct? Crowd likes overnight returns. I don't believe in overnight returns. I believe in hard-earned returns. So if you do your homework properly and you focus that, and we also assume that 80% of the companies listed in India are crooks. They don't care for their shareholders. They don't care for anyone. They care for themselves. So only 200 good companies are there in India. Focus on those companies. Same thing in US also we do. Global portfolios. We prefer to invest in large caps of good countries and good economies. We avoid mid cap and small cap. We don't want lottery. We want steady, and that's how we manage. And then we educate our investors, correct? So managing the expectation is very key here, and that's how. And we don't try to. I've never ever in my life sold a new mutual fund issue. Never. So it's like people in last 20 years, neither in America nor India, I have never applied for new IPOs or new fund issues. I discourage that, because what happens when you do those kind of investments, you ruin your portfolio by a haphazard way. And we never invest in any fund which is at least 2 years or 3 years old. We never do that. And we don't like anyone investing in more than 5 or 6 items. The less number of items you have, the more returns you get. Next question I have is, as you said, there would be a second wave of COVID and panic. So do we wait to settle this and then invest in large amount, or we don't know the depth? Again, I said, no, I don't want you to wait. I want you to follow the process. Again, there's an emotion and timing, correct? Market... Okay, so if you have to invest 100 rupees, you invest 25 this month, 25 next month, 25 in January, and 25 in February. That's how you do it. If markets fall, don't try to time the market. Good businesses are always good, correct? Good businesses are always going to go good. Good sectors are going to always do good. So when we try to time the market, we think we are smarter than everyone else. The market is smarter than everyone else. No one can predict the market. If anyone says he's able to predict the market, he's telling a lie. Now, we don't try to predict the market. What we do is we try to select good sectors, and good sectors where growth is going to be there, and that sectors are selected based on pure fundamental research and data, and our experience of last 30, 40 years. Yeah. Next, very good question. Now, what would be the impact on the markets in short term, next 1 or 2 months? Next 1 or 2 months, market will be uptrending. I don't see a major correction. Normally, the last quarter of every year and the first quarter of the new year, calendar year, is always good for stock market. So there is a saying in America: invest in October and sell in May. You follow that cycle, 9 out of 10 years you go right. So next 6 months are going to be very good. If any major correction will come, it'll come. I don't know. It may come. Correction is when the market goes more than 10% down, which already happened last month, correct? In last month in September, market had down by 10%. It has recovered fully. So I don't see anything happening now. So the next question is, would there be any impact of if there is a mixed government in the US, Congress, and so that's a very positive news. So the stock market always wants a mixed government, so they can't do anything. So the markets don't like government. The more the government tries to regulate the economy, the more mess it is. So we see that in India. Yesterday I was reading the headlines that in Haryana the government passed a law that any private company, private sector, when they do hiring, 70% reservation has to be local people. So markets, you can't do business that way. You can't attract big companies like that way. So market doesn't like government regulation. So when the government is divided, they like it because they know no legislation is going to pass. So that's a positive news for the market. That's why, in fact, that's the reason market went up. They saw that Democrats are not going to win the Senate. So the Congress is going to be, and the Congress also, they are coming with a lower majority. So they'll be more humble. See, whenever you get mass, huge votes and huge majority, you become arrogant, correct? Any government, whether it's India, America, everywhere, correct? So when you have very thin majority, you're careful. So that's a good thing for the market. Next question is, you said that US will lead the recovery. So does it make sense, more sense to lean towards US or keep the balance in favor of Indian market? Okay. Again, as I said, in our food, gulab jamun is very sweet, correct? Roti is not sweet, but you eat only 2 gulab jamuns, correct? So in our investments also, we don't try to put maximum money, whatever is giving highest return. We should never do that. US feeder funds. So now currently we are telling our clients to invest 20% in US funds, 5% in Japan, and then 15% in India Technology Fund. So that is almost 40% going to technologies, which is very high, correct? Which is very good. And the rest in pharma and banking and all those consumers, and that we do, correct? So maintain a balance. Like in a food, we have rice, roti, a balance, correct? We don't eat only gulab jamuns or any sweets, correct? So that maintain a balance. That should be that. Next question is, which US stock can be invested from NSE? No, there is not a single stock which is quoted on NSE. You cannot buy any US stock. There are only one ETF is there. So there is a Hang Seng ETF and there is a Hang Seng ETF and there is a Nasdaq ETF. But I don't prefer to invest in ETF in India because what happens is we are managing a very large corpus. Now I give you Hang Seng ETF. The total corpus of Hang Seng ETF is only 13 crores, which is a very small amount. Now our total exposure to international equity is more than 25 crores. So if I go to sell, some of my clients want the money on that ETF, the ETF price will tank. So we prefer investing in through feeder funds and mutual funds because there the money is guaranteed to come back. Now maybe after 5 years, when there is a huge volume ETF in volumes in ETF, that time we'll switch to ETF. Is it wise at this stage to liquidate all mid-cap and move to technology funds? I would gradually liquidate mid-cap, gradually, not emotionally at one shot, and invest in sectorial funds, correct? As I said, sector, and build a portfolio. We at Simplicity have started doing that. So in last 7 years of our experience, correct, in India, Simplicity has been there for 7 years. What good thing did and what bad thing we did, correct? So if last month I was checking with most of the fund houses, today Simplicity is 99% of our AUM is positive, but in the market 97 to 95% of the AUM is negative. That's why because most of the people in the market have invested in generic funds and value investing, which includes large quantity of PSUs, have taken massive beating. A massive beating they have taken, and investors are very unhappy. So, in fact, at Simplicity, when we look at our last 7 years journey in India, in our core funds, we had one large cap fund and we had one mid cap fund. So both those funds underperformed. So we are slowly we are realized that, I don't want to give any fund manager the control. I want to invest only in thematic funds going forward. So Simplicity has taken a view that slowly we invest only in thematic funds where the fund manager doesn't have a lead. We have the control. So I know technology sector is doing well. I know healthcare sector is doing well. I know consumer sector is doing well, so I'll invest. But when I give him in a large cap fund, the guy goes and invests in any kind of stocks. He goes and buys in PSUs. He buys Bank of Baroda, Oriental Bank, and all that kind of. So in fact, 1 year back, I had an argument with one of the vice presidents. I said, if you get a job at Oriental Bank as vice president, will you take it? He said, no. Then I said, why the hell are you investing there? So the logic, you should invest only where you will take a job, where you'll so if you are not going to, don't go by that value investing. Why you're not going to take a job in Oriental Bank as vice president? Because there'll be government interference, no future growth, a lot of politics. So why you want to park your money in those kind of institutions? I wouldn't do that, correct? So invest in sectorials and invest in clean companies, and where there is least government regulations. Yeah, and this is the strategy you would follow. Let me see any more questions. I think there are no more questions with this. Thank you very much for attending today's webinar, and do share your feedback with us, what you feel about our webinars, and subscribe to our channel. Thank you very much, and I'll see you after 2 weeks. Yeah, thank you very much. Bye.